Hello, good morning. This is Holly Shields live from Kalkine Studios in Sydney, and you're watching our Market Open Report. This is the early trades. So far today, the S&P ASX 200 fell 0.3% in the first minutes of trading, with tech stocks plummeting 4.7%. And then in the 30 minutes to the opening bell, two players have already taken a dive. Appen was down 5.56% and Polynovo down as well 5.36%. Over the last 5 days, the index has gained 3.12% but was down 5.28% for the last year to date. And meanwhile, shares in Block's ASX listing fell 8.7% in the opening minutes of trading to the lowest level on a closing price basis since the company was formally added to the local market last month following the takeover of Afterpay. And also in the news, Computershare stock fell, declining 2.2% in the opening minutes of the session after a strong day on Wednesday. Now for a look at some crucial announcements from ASX-listed companies in detail, starting with some not-so-good news coming in from Aristocrat Leisure, whose proposed acquisition of Playtech has fallen through, with the deal not expected to garner enough votes from shareholders to proceed. Playtech has issued a release announcing the voting results of the shareholder meetings held on the 2nd of February for the purposes of considering the acquisition. But unfortunately, the votes cast in favour fell short of the 75% threshold required to implement the acquisition. Aristocrat made a $3.9 billion bid for Playtech in October, which was backed by the board and at least 20% of shareholders. And also in the news, Westpac today announced an unaudited statutory net profit of $1.82 billion for the quarter ending December 31. That's up 80% on the quarterly average for the second quarter half of 21, and the 1% rise for the first quarter of 22 cash earnings relative to the second half of 2021 quarterly average primarily reflects the lower expenses and a strong contribution from Treasury and markets. The rise was partly offset by lower net interest margins, a turnaround in impairment charges, and the absence of revenue from businesses sold, particularly insurance. And then as well, Nufarm said in a presentation made to shareholders today that its revenue for the December quarter jumped 36%. This was supported by favourable weather conditions, particularly in Australia, and the continuation of strong customer demand in all regions for Nufarm's crop protection and seed products. So while agricultural conditions and the outlook for soft commodity prices remain favourable, Nufarm expects earnings in the financial year 22 to be heavily weighted to the first half of the financial year. They are although confident of revenue and earnings growth for the full 2022 financial year. And meanwhile, furniture retailer Nick Scali today reported its results for the half year ending December 31, with underlying EBIT of $55.1 million and an underlying net profit after tax of $35.6 million. After a turbulent 6 months, the group had closed over 55% of the store network, whilst maintaining widespread disruptions to their supply chain. Nick Scali's profit tanked 6.6% compared to the prior corresponding period in 2021. And this morning, the company's directors declared a fully franked interim dividend of 35 cents a share, with a record date of the 7th of March 2022 and a payable date of the 28th. This represents a payout ratio of 85%. And then also in the news is Emeco Holdings, which announced that their first half operating earnings are within the guidance range, giving the company the confidence to formalise their full-year guidance. Emeco advises first half of 2021 operating EBITDA of $122 million, which is within the range of $120 to $125 million provided at the company's AGM on the 18th of November. The board, however, notes that the ongoing impact of tighter labour markets and absenteeism as a result of COVID-19 will continue to be managed carefully. Well, that is all for now on the early trades, but tune in next time only on Kalkine TV. This is Holly Shields signing off.